I'm Howie Lim. This is Money Hacks by the Business Times. We're often told that in investing, speed is everything. But what if the best feature of an investing app isn't how fast you can buy, but how well it can stop you from doing something you'll regret 5 minutes later? Welcome to Money Hacks. I'm Howie Lim. Today I'm joined by Andrew Izyumov, founder of 8 Figures. He's built an AI that acts as your portfolio manager, tax advisor, and risk officer, but most importantly, it acts as your financial conscience. Curing analysis paralysis, the philosophy of intentional friction, and whether AI can actually be trusted with your life savings. Let's find out.
Thanks for having me, Howie.
I want to start with the trust gap. Most of us are conditioned to trust a human advisor with our life savings. How do you bridge the trust gap when the advisor is AI? And what's the fail-safe in case the AI makes a recommendation that feels just wrong?
I'd say that even human advisor sometimes can make a mistake. And in case of AI, a user always in control. So it's up to user eventually whether to agree or not. As a user, you can treat it as a second opinion, effectively. When you go to one doctor, you hear something, you might go to another doctor just to check, okay, what's the other view here on the health issue? Same with financial advice, right? You can get one financial advice from human, another one from AI, or from different models, actually, and then you compare. Sometimes human advisors do make a mistake as well.
What about how you've built 8 Figures, your platform? It's supposed to act as a committee of 5, the portfolio manager, the tax advisor, the planner, etc. If you're an investor and you only have the mental bandwidth really to focus on one of these roles, which one is the absolute non-negotiable, you think, for building long-term wealth?
For building long-term wealth, financial planner would be absolutely paramount. So you set your financial goals, you track your progress. As we say, without tracking, you can never improve something. So you got to track how you progress towards your financial goal. The other portfolio, equity research analyst, risk officer, they are also very, very important. But without a financial planner, you kind of don't know where you go eventually.
And this friction philosophy that you have, are you sure is the pop-up that you would like to see? Just to make sure that you're making the right decision, so to speak. But then in this industry, which is obsessed with the one-click execution and speed, is speed actually the enemy of wealth, or is it just the enemy of emotional decision making?
I would say best analysts are fast at analysis, but slow at decision making. So indeed, the markets are moving fast. You want to be in the context. That's why our AI investment advisor monitors the market 24/7 for you. So you are always aware what's going on and how could that affect your portfolio. But then when it comes to decision making, trading is one thing, investing, especially long term, is completely different thing. And if your goal is long term steady wealth building, you should really prioritize investing rather than trading.
What about the incentive trap? Users are usually afraid of this because third-party incentives, platforms such as yourself, not completely altruistic, I'm sure. In a world now where we have many of these free investing apps to make money through kickbacks from fund houses, how does your business model, though, ensure that you're actually incentivized to put the user first?
It's a very good question, and it's exactly what we've been seeing on the market. For example, your broker might also have an AI advisor or assistant, but what's the incentive? The incentive is to make you trade more often because that's how your broker makes a commission. Same thing with human financial advisor. They often charge 1% of assets under management. So their key incentive is just to grow that portfolio under management as opposed to your long-term financial goals. Not always the case, but sometimes they often push high fee products on top of their core 1% fee, which you might not actually need for long-term success. In our case, we just charge a flat monthly fee of only $20. So it's more aligned. Our key incentive is to keep you happy and long-term user of our app.
Let's talk about your risk officer, AI risk officer component, if you will. Let's say it suggests a major portfolio change. How much visibility would I get as to why it's decided to suggest this? Because if we are looking at a black box recommendation, it's obviously natural for an investor to be skeptical. Can we peek under the hood?
Exactly. We know how ChatGPT works or Claude. You see those little threads, so you can see how AI actually thinks and what the foundational assumptions made behind the answer. Same thing we're building at eight figures. You've got those multiple agents talking to each other, and you can actually see what they thinking and what they are telling each other. So you can effectively spy and see behind the scenes of your AI investment team working together to generate you the best advice possible. And the challenge we faced is how to better show it in a small mobile screen. That's what we are working on right now. We already released the kind of the first version of this interactive interface, and we are improving it as well.
I bet there's lots to see. That's why it's challenging to put it into a small
Exactly.
screen, right? How does your platform deal with the options paralysis, analysis paralysis, if you will? How does it narrow down the field without falling into the trap of giving everyone the safe but mediocre advice?
We see that in the industry, it's very, very common just to push boilerplate solutions, one size fits all solutions. In our case, we are really trying to customize, to tailor the advice we are giving to the actual user needs, profile, long term goals, and so on and so forth. Because without personalization, it doesn't make much sense. It's not one size fits all. The liquidity constraints, the family constraints, long term financial goals, retirement plans, these are all different things that impacting the outputs that we are generating. So what we do, we try to supply as much as possible context to our AI models. So each AI agent, as we call them, each AI person in the AI team knows exactly the full context and can analyze that from their perspective. So we are talking about portfolio manager. Obviously, they are well aware of your portfolio, how it's been performing, what's the diversification, and so on and so forth, and can recommend based on that. But then financial planner comes to the picture and sees, all right, well, if portfolio manager thinks that's a good addition or rebalancing decision, how does that stack up with your long-term financial goals?
Hold that thought. More with Andrew Izyumov, founder of AI platform 8 Figures, about AI becoming a whole investment team for you, from portfolio manager to tax advisor. Stay with us.
Market Focus Weekly, now hosted by Howie Lim. A sharp weekly deep dive into what's moving markets in Singapore and across the region, with analysts and market insiders to break down the forces shaping the week ahead. New episodes every Friday, powered by the journalism of the Business Times. Find Market Focus Weekly wherever you get your podcasts.
And now, back to Money Hacks from the Business Times.
And then because of that multi-agent system and conversation between agents, we are able to generate really truly personalized advice.
It's almost starting to sound as though they might have fights amongst each other. And then if you add the human element, which it could be emotions, it could be ego, because what if I've decided I just want higher returns, and then I've suggested to my AI team that I want to do something that just seems unrealistic, or based on the data that your platform will have is an unrealistic goal, and it's probably wrong for the stage of life that I'm in. Is your platform able to go, at the risk of pissing me off, so to speak?
Yeah, that's exactly the problem we've been seeing in a lot of retail investors. They prioritize short term gains over long term success and financial goals. And look, the management of personal portfolio is quite different from just whether it's growing above or below S&P. It's much more complex. Maybe it's growing below S&P, but maybe it's less volatile and maybe it's producing passive income. All right. And that's maybe much more important for particular user, for reaching users' financial goals than just beating S&P. And that's just not the purpose. And other parameters and metrics should be taken into account. Volatility is very important as well, and liquidity and passive income and so on and so forth. So indeed, we are trying to take all of these into account and not just look at particular raw performance metric. And a lot of financial biases, unfortunately, we've been seeing in retail users. If the market is growing, everyone is buying, right? When the market is dropping, well, fundamentally, you probably should consider whether to add to those positions that you have high conviction in. In fact, people tend to get scared and start selling. So those biases also definitely we teach our AI agents to work with those biases. And from what we know in the industry, generally financial planners and financial advisors in the US spend up to half of their time just dealing with those financial biases. And that's exactly what we are doing in case of our AI team as well.
Your AI team, does it want to take on the human aspect of things? Like you say, when the market hits bottom, people will panic sell, when actually, if you stayed calm and thought about it, is the best time to maybe reinforce your position in some investments that you really feel strongly about. So if it's a case of the market goes into the red, how does your AI specifically calm somebody down without just the usual platitudes?
I think the key is really to understand those particular positions that are going deeply in red. Are we seeing the shift in fundamental thesis? Or is just general market reaction on some events that may be even not related to your particular position? And B, whether that particular position still fits to your financial goals. When we consider these two, we can then make more informed decision whether to do anything about this or whether we should just stick to the plan or maybe even keep adding to the risk if we see the attractive opportunity. You can buy it cheaper, you can make higher return. Maybe that's exactly the case. It really, really depends. What we're trying to do, we're trying to teach our AI models to think this way.
Is there something AI about humans still can't replace? Or have you figured out what it is and you're going to try and replace humans with your platform?
Well, as we say, AI is only as good as the human who operates them. So we obviously AI sometimes hallucinates. Okay, everyone is aware of
I
that.
think there's the argument that humans hallucinate too.
As well, for sure. Also, we are all aware, and I've seen it many, many times, for example, with GPT, when the model tends to agree with what you are saying and basically telling you what you want to hear, as
Yeah,
opposed to being
AS,
objective.
artificial sycophant.
Yeah, exactly. So that's why, it's important to still have human in the loop. And what we are trying to do, we are trying to analyze how our model perform and provide our own expert financial guidance and improve the quality of output. Of course, there is no guarantee. And of course, there could be some hallucinations. But as you said, exactly, human advisors, sometimes they can also, I would say, produce suboptimal advice. And
Mm.
if your AI model is beating the average advisor, I think we're already in a good place. Having said that, there are complex cases where you have multiple jurisdictions with multiple legal entities, with, let's say, some estate or tax complications where it's inevitable to hire a human advisor. No AI right now can replace a human advisor in those very complex situations. But for more, let's say, general portfolios or for less complicated cases, AI is perfectly capable to provide on par advice with average advisor and sometimes even much better.
What's the one mistake that humans are still making as you watch thousands of interactions? What's the most common money mistake that AI is uniquely built to stop, yet people still make it?
I mentioned those financial biases. People still, unfortunately, very emotional. They make a lot of decisions on the markets, myself included, by the way, even after 20 plus years of investing experience, including professionally at Goldman Sachs. sometimes, I mean, we are humans. Sometimes we do make emotional decisions. And AI is exactly built and trained to avoid that. There are no emotions behind the machine. So AI is very good in spotting those emotional decisions and dealing with them.
Andrew Izyumov, founder of 8 Figures.
Thanks a lot, Howie.
I don't know about you, but I can't even commit to using facial or thumbprint recognition on my phone, let alone have AI manage my money. And coming up this week, Property BT, an episode on the state of play of Singapore hospitality. Don't miss it. I'm Howie Lim, and this has been Money Hacks by the Business Times.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts. Or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.